While a significant majority of liabilities are things like what you and I would consider debts and loans, there is a portion of future work through that kind of sacrifice. And that's called unearned revenue. You see, unearned revenue is when you've already paid me for something that I have not done for you yet. So, for example, gyms. Gyms actually get the most amount of money in January. When new year resolutioners come and they actually sign up and they say, hey, I want to pay for this year of my gym membership now because you have a great deal going on. So let's just say, for example, they're going to pay $120 for that year of gym membership. Well, see, the gym has not given them a full year worth of gym time yet. And so they actually have to say, okay, we can only recognize about 1 month of this, January's, right now. The rest of that work, I owe them in the future. And so the gym says, out of that $120, I only get to keep $12 in kind of revenue this year or this month. The other $108 I have to push down, and that becomes unearned revenue. Anytime you get a payment before you do the work, you have a new liability of unearned revenue. Let's look at maybe hotels as an example. Let's say that you pay me $100 for a hotel room in a month from now. Well, I owe you a hotel room a month from now. I cannot actually say that I got a full sale yet. We'll talk about the rules of what classifies as a sale and not a sale later when we look at the income statement. See, those are the rules that kind of create unearned revenue. Anytime that cash doesn't change hand or the work is not done, these are accrual accounts. These accrual accounts make a little bit complicated accounting. So unearned revenue, once again, happens when you pay for something that you have not quite received yet, or I've been paid for something I haven't given you yet, like hotel night. So remember, unearned revenue is considered a liability because you owe someone something in the future, which once again kind of goes back to our rules about liabilities, is why we think of liabilities mostly as debt. It doesn't always have to be debt or a loan. It can be something, really anything, like work, that you owe someone in the future. Just keep that in mind every time you look at the liabilities on a balance sheet.